So imagine somebody, they maybe have been listening to this podcast for years, even though I've only been around for 1 year.
Wait a minute. What's the time?
Shut up. They want to get into real estate. They love the idea of financial freedom. They want to buy rental property. They just haven't pulled the trigger yet. Maybe they've got a decent job. Maybe they've got a crap job, whatever. What do they need to know? And maybe we'll start with the legal side. Everyone generally thinks go out and get an LLC. Is that the first thing they should do? They open up a business. What's the process?
Yeah, I
Mauricio?
think people overthink this a lot, right? They all they'll rush out. I think Cam, you and I were talking about this. But they'll rush out and put together some really complicated, structure or stuff. And when you're just starting out, you don't need all that stuff. I mean, in the book, I talk about sort of the 6 layers of asset protection. And this is obviously layer number 1, right? Which is just, you want to be protected. So once you do acquire the property, you want to have some sort of insurance, right? Because one of the issues with rental properties in general is that if something were to happen, if the tenant slips and falls or a boiler explodes or some damage happens to that property, then you as the owner have unlimited exposure. They could sue you for $1 billion.
Yeah. And
you're like, well, I don't have anything. You're like, oh, I just have a W-2 job. I don't have anything. So who cares? Well, what you do have is future earning power. And they can always attach your future earning power. So even if you don't have the assets now, it's like, I don't have any assets. Well, you have the property, number 1. But more importantly, you have the ability to go make more money in the future and acquire more assets in the future, in the property. So you always want to start with having some sort of an insurance policy. Many people are underinsured. Like they have $1 million policy, and that sounds like a lot, or $500,000 policy. But litigation can get expensive. That thing can be eaten up in legal fees. And sometimes the judgment is much higher and your insurance just isn't covered. So bottom line is insurance isn't enough. So you want a backstop, even if you're a newbie. So at a minimum, first layer, insurance, but then you want to have the backstop, which is what the LLC is. If the insurance policy, for whatever reason, doesn't cover you, undercovers you, isn't there, you want to have a backstop. And that backstop is the LLC. And that's just something that you would create. Again, don't get too fancy. Create that in the state where the property is located, and that's going to be your first layer.
Does the LLC come first? Does the property purchase come first? What are your thoughts?
Property. So most of the time, from a legal perspective, a bank or a lender is not going to lend to an LLC. They're going to lend to you in your personal name because you're the one that has the credit, their income, this LLC. People think that you're just going to create a brand new entity and suddenly it's going to have all this credit and credit worthiness. Like it's brand new. It has no income. I
see TikTok videos sometimes. Just open up an LLC and go get a bank loan on it for $200,000.
By 5 p.m.
Exactly.
Yeah. Would you loan somebody some LLC that just got created this morning? Of course not. And so banks aren't stupid. They're not going to do that. So what generally happens is you close on the property in your personal name. Then after maybe 30 days or something, you create the LLC, which shouldn't take you that long. LLC, again, don't get super complicated. It takes maybe a week to set up, and it's not super expensive. And then you would transfer the property for asset protection purposes from your personal name into the name of the LLC to get that asset protection.
Can I ask a quick tax question on that transfer? So if you're doing for your first rental and you are doing the BRRRR method, let's say, and so you close on that in your personal name, you're fixing it up, you quit claim it over into your LLC, is there, because you bought it at $70,000, now you fix it up, it's worth $150,000, is there a tax liability on that?
Not usually.
Not usually.
Yeah,
okay.
because in most scenarios, you're going to be a 100% owner of the LLC. So for tax purposes, it's still the same owner. There could be fees, of course, like whenever you transfer title, there could be fees at the county. Usually, they're not very high. There's some specific counties that are a little bit higher, but usually that's not a tax problem. And that's one of the reasons, if you are going to have an entity for liability protection purposes, we typically recommend an LLC from a tax side. And the reason is especially for this, is you can easily transfer title in and out. So it's not uncommon, if you mentioned the BRRRR strategy, after I rehab it, I'm going to refinance. Well, sometimes they won't refi in the name of the entity. So I still have to be on that the loan. So at some point you might have to move it out of the LLC to do the refi to pull the cash out. So
sometimes the banks want a seasoning period there too. So you
Yes.
can't just take
You
it
can't
out.
just back and forth.
Can't just go back and forth
Yeah.
whenever you want. Like the bank wants to say 6 months to 12 months sometimes. So usually when I do a BRRRR, I will buy it in my personal name. I will then wait until the rehab's done.
And
I'll
then put it
refinance it. And once the refinance is done, the permanent financing, that's when I put it in the LLC. Now, that doesn't mean a year of risk where there's no LLC, but that's the game you got to play sometimes.
And the nice thing about an LLC is that it's got the flexibility to have it taxed however you want. I mean, obviously, if it's just you, it's going to be disregarded, but you can have those taxed, correct me if I'm wrong, Amanda, as a partnership, as an S Corp. So you can have an LLC taxed as a C Corp. And I'm not saying you want to do that for this purpose, but it's just so flexible and it has the best asset protection of all of the entities. You don't want to be owning a corporation and have, trying to rely on a corporate structure for asset protection. It's terrible, which is why I generally don't like S corps in general, because people set up corporations and then just don't give you the protection. LLC has the best of both worlds. You get the asset protection, you get the limited liability, and then you get the option to tax it however Amanda tells you to tax it.
Yeah, I think one of the biggest mistakes I see when it comes to newbie investors and entity formation is like what you said, people make it too complicated. And I think that's further complicated by just bad legal and tax advice on social media, or just bad actors out there who are trying to tell people to sell a $7,000 or $30,000 package, right? Where every investor must have a bunch of LLCs with a C corp and a management company and a nonprofit. And although that might be great for Robert Kiyosaki or Brandon Turner, but that might not be the best for a newbie investor. Because sometimes when those people come to me, like, hey, I got 7 entities here. Well, guess what? It's very expensive to file tax returns to
Especially
pay
in
the
California.
state. Yeah, to pay the state, and to find out like, oh, well, it doesn't actually own any properties, right? And now you spent $30,000 on entity formation. You no longer have money to do that bird deal. So something to watch out for.
And if you are going to, this is a big mistake I see all the time too. If you're going to set up an LLC, right? You've got to transfer the property into the LLC. A lot of people forget to do that part, and so they create the LLC.
Never done that.
Making Brandon uncomfortable.
I'm sorry, I wasn't thinking of you specifically, but people set up an LLC and it just sits there, and they never actually transfer it. You've got to
I've
transfer
done
the
that so
property
many
in
times,
there.
man. So many times.
Yeah.
Amanda, do you remember back? I'm sure you do remember. Early on, I set up an LLC, and it was a partnership LLC with somebody else. It was my in-laws, maybe, or my parents. I don't know, or maybe it was me and Heather. But what was the rule? Like, you have to then file, if it's a partnership one, you have to file a business return on that, even if it's just. Even if it's just me and Heather, or did it have to have another?
It wasn't you and Heather. I think it was you and somebody else.
I think it was me and
in-law or partner.
Oh
or
yeah,
something.
it was my business partner. We bought one rental together.
Yeah.
We never transferred it into that LLC.
Right.
We just had this LLC, and then I just kind of forgot about it. Just every year I just pay the money to keep it because I thought I would eventually use it.
Yep.
I never filed a.
Yeah.
Can you explain what was my problem there? What did I screw up on?
Yeah, people do that all the time, right? They're like, have an entity, I never used it, so I don't even think about taxes.
Yeah.
It's just there, and also it's protecting my assets because I have an LLC.
Yeah,
that's
of course.
magic. And we do see that a lot. And so the issue is, if you have an entity that's a partnership, you and somebody else, the IRS does require an entity return. It's a business, right? It's you and somebody else doing business, and so at a minimum, you should be filing a no activity return. Should be pretty cheap to do, but nonetheless, you file it. The reason it's a big exposure is if you don't file it, then you're paying penalties on each partner. So if there's 2 partners, I think at the time it was like $125 per month per partner.
Yep.
You imagine we have 4 partners, it gets higher and higher. So
Yeah, that was us. I think we went 5 years of 4 partners that we got hit with that. And I don't remember whatever that number is, 100 and whatever times 4 times 12 times 5. It was a lot of money.
Yeah.
And it was which I don't remember, it was 20 grand, something like that, I don't know, give or take. And I had no money then. Like, I mean, I was just real. Like, I was like 27. I had no money, and it was also in this huge tax hit.
Yeah.
And you saved me though. You wrote a letter.
We resolved the issue.
Yep.
We resolved the issue. But I think that the big piece of it, I think for you at least, was a big learning experience,
Huge,
right?
yeah.
Like, we don't just go out and form entities on LegalZoom because Mauricio said it was really great to do it. We had to figure out, did it make sense for Brandon? And I always tell clients, entity formation is like anything in real estate. It's always a cost-benefit decision. Before you form an entity, before you do anything, understand what is the cost for you, not just to form it, but to maintain it, file tax returns, pay the state, and all that bookkeeping too. Right?
And what's the cost of not doing it right? I mean, you might save a couple bucks on the front end, but that's one of my biggest pet peeves. A lot of people waste legal fees on the back end because they didn't do it right, whether it's this or whether it's having an attorney draft an agreement or something, and then you save a few bucks on the front end, but then when there's actually a dispute later on, then you're like, oh crap, and then you end up spending thousands of dollars. So yes, LLCs, you want to make sure that you're talking to somebody who's a specialist in setting up LLCs, and then you always want to be connecting with your CPA. LLC structuring is a little bit more flexible than taxing. So what I generally do is we create a structure, we'll send it to Amanda. Amanda will review it, and she'll be like, well, from a tax perspective, XYZ, we can then try and get more creative if we need to. But I know we're getting ahead of ourselves because we're getting ahead of ourselves since we were just doing, the newbie investor. But it's just the importance of doing it right on the front end, and don't just file it wherever the TikTok guy said, because then it ends up costing you more on the back end.